because I like this product actually.
That's why I was
so
talking to you.
no. I wanted to explain from the technical.
I made the right question then.
Yeah. No, like.
Hello guys and welcome back to another episode of Hodl Up. Today with us we have Arthur and Ashna from Mercuryo, and they're going to be the first guests of our EthCC run. So guys, thank you for joining us today. And like before we even start, I mean, if you could just like give us a TLDR of what you do and what you guys have done before you joined crypto, like the shortest origin story, that would be amazing.
Thanks for having us. I think Ashna, you want to start first?
Yeah, sure.
Yeah.
Thank you so much for having us. So I joined Mercuryo just over 4 years ago. So I look after the customer operations team. So I basically any team that looks after the customer, whether it's success, support, integration, and FinCrime, that's what basically I'm looking after. And before that, I was at Starling Bank, where traditional finance. So I've got the best of both worlds in terms of going from regulated to then now going into more regulation in crypto as well. So that's basically what I do.
I also joined crypto from traditional finance. I used to be an investment banking firm and joined Mercuryo like one of the early days as a part of the funding team. And we had like, I guess, interesting run over the last 7 years. So currently I'm looking after enterprise and corporate development and partnering with the largest financial institution in the world and trying to navigate the landscape in terms of the potential strategic partnerships and investments as well.
So speaking of all of these developments and potential partnerships as well, what have you guys been working on like more recently or like give us some alpha as well in terms of what you guys are planning to do in the next 6 months, for example?
Okay, I think for the recent, maybe Ashna, you want to add something that we're currently dealing with in terms of like the existing clients?
Yeah, so we're maintaining what we have currently with existing. So one of our big focus is on and off ramp, and we're currently growing that, working on conversion rates, success rates, things like that, to just maintain and sustain the business that we have. That's our main focus, and we've got Mika around the corner as well. So it's ramping up the regulation, creating this robust team so that we're not only just ticking all the boxes, but we're maintaining trust with our clients as well.
Yeah, like since you mentioned Mika, what do you think? I mean, is this the right step towards a more regulated world? Let's say, because personally, I think that it's a bit of an overreach, and I think it's done in that way because they want us to, basically obey the traditional finance world, and it makes sense, right? Because who wouldn't? Crypto, had its ups and downs. Like, do you think this will change in the future? I mean, do you think Mika will be the final framework that we follow in the EU, and of course beyond that?
I think I do believe that it's a good thing. I don't see Mika as a blocker. What I see as it's changing, the industry of crypto is changing so fast that it's not so much about efficiency anymore. It's more about trust. There's so many players in the industry, and what separates a lot of these players is the trust element. They didn't get their compliance fixed from day one. We're seeing a lot of issues fall through. We can see lots of gaps. So I think Mika's been put in place not just for transparency data. It's a good thing. It helps us protect our end users as well, which is super important. And it builds trust with our institutions as well that we use, which I think it's super important.
Yeah, I mean, I agree with you regarding that. I mean, having this uniform framework is what, for example, the region was missing, but I can't help but feel like it does maybe prevent some startups, because it makes sense for an exchange to have to go through all of those procedures and all of those compliance costs. But for example, if I wanted to have a startup, I mean, this is just my opinion. I shouldn't have to like bear all of those costs similar to what an exchange might bear. But since you said that this is an evolving industry as well, and we're at an age where we're seeing AI proliferation, And how do you handle, for example, fraud prevention with this AI age that we're, I mean, in this AI age that we're living right now? I mean, it's we have bots, we have a lot of things to be concerned of, and that's where regulation does come in hand. But like, I want to hear your take on this as well.
I mean, it's crazy AI. So essentially, we're fighting AI with AI.
Yeah.
So a lot of the AI bots we're using, or not, well, that bad users are using, bad actors, we're essentially using our AI tools to fight them back. So it is becoming a problem for sure. But I think if we educate our users, that's number one. This is what we need to do: educate our users within the flow as well. When you're using it, just to prompt any bad actors that do come across on the flow. But to answer your question, I think the regulation does beat this kind of thing, because we are seeing fraud grow rapidly, whether it's in crypto, traditional finance, it's everywhere, even a retail store. So it's growing. So we definitely do need something in place to trigger that, to stop that from happening.
Yeah, I saw it on crypto Twitter. Like it's crime season right now, so
Yeah.
there's fraud everywhere.
Always.
Yeah.
Always.
Okay, so now I want to pivot a bit to Arthur and the business side of Mercuryo. So, like we mentioned, one of the features that you guys, not features, like the approaches that you guys have towards, this AI attacks, let's say, in terms of fraud. But like, why should the company choose Mercuryo to provide the infrastructure that they provide for on-ramping and off-ramping? Because you have competitors, so I want to know like what makes you, right?
Yeah, I think I would start the answer from going like from another like question that you guys asked about the MiCA and compliance and overall like startup environment. I think it's super important to have like a rapid, fast like establishment of your company in Europe, and start. This is where we started actually initially in the UK, and we had like a European license in the first place, where it was kind of our moat and competitive advantage, where other companies didn't have it. Like majority of the crypto financial institutions, they were like pretty sensitive and kind of like clunky in terms of like their compliance frameworks and policies.
They still are. I mean,
I mean, yeah, like so imagine 7 years ago.
yeah.
So that was definitely edge. So like, but right now, I think the way you look at this business, like if you want to start the company and you want to deal with the crypto nature, like a digital assets or like stable coins, whatever infrastructure you're working on, I guess your main focus will be like kind of distribution and what type of strategic partners you will be looking for. So for us, we had the direct path. We acquired the license and we went directly to all of the crypto native platforms that were there, primarily exchanges, wallets. It was like 2019, 2020. And we captured majority of this market, like just directly approaching those people, going to the conferences, doing like, I don't know, some activations and education as well, like talking about the products. There wasn't, I guess, the term in like an on-ramp before as well, kind of like being invented recently, like I guess 7 to 10 years ago, specifically in crypto world, right? So because there were companies that were doing like a fiat to crypto operations and like allowing other platforms to accept users from all around the world they want globally. So that was our like basically idea and thesis to build a Stripe for crypto and make it global, available, and in kind of like seamless in terms of like connections. So now the framework, when you want to start a business similarly and in the same domain in a digital asset, like whatever, whether it's payments, whether it's like a stablecoin infrastructure or yield infrastructure, like you're probably looking from the different angle. And yes, there are some constraints, like, and you probably will have to go through like larger scale process of like applying for the licenses and complying with the licenses. But I would agree with Ashna. In my opinion, it's a great thing because now the framework is there finally. And we were like starting from one country, other country was like thinking about the other framework, so we had to finesse it, right? We had to like talk to so many lawyers in all of these regions, and right now it's kind of like unified standard. So like, but what changed from the business perspective for the companies that start in this business in this space, particularly in Europe, you need to go through probably like strategic partnerships instead of directly going to the distribution model. So like strategic partnerships might be like banks or like financial institutions, like primarily I guess modern ones like fintechs and modern neobanks, or like some payment companies like Mercuryo, answering your question, why would you go like with Mercuryo? You might be like building something in this domain, but you don't have a license, and the way to acquire is like, you know, to pay money and like spend like, I don't know, some time on it. And you want to build fast, and as a founder you probably want to focus primarily on the distribution and like company scale and establishing the team, etc. So I think choosing Mercuryo right now is like kind of going through the, you know, like acquired knowledge and experience that we had back then, and kind of like we saw like over the last 7 years, and we advanced in like and we kind of like being present right now these days as well. And I still believe this mode. For example, if you want to partner with any enterprises, financial institutions, like you said, there are like a lot of companies that's you know, kind of like building in this space, but they're like super regulated. They're like I don't know, one of the largest financial institutions in the world. In order to work with them and comply with their like standards, you will need to have like some kind of like partner, strong partner. And yeah, we'll talk more about this. I guess that's why people choose us, both like startups and both like larger enterprises, because we had this kind of framework, and we've been working on these frameworks and kind of like frauds and all of the other payments nature use cases for the last 7 years.
I mean, when you put it like that, you convinced me at least. So let's just hope. I mean, because I've seen, for example, some regulators, for example, even in France, some regulators, they don't like how the passporting thing with Mika is working out, and they want to like stop it, you know, or prevent it from, for example, for some reason, acquiring a Mika license if you're in Poland is easier than acquiring it in France, and now they're looking at the disadvantages that they have as regulators, because they're saying, I mean, it's not fair if someone just goes and gets a Mika license very easily and then is allowed to operate, for example, in France. So I just hope like these regulators like understand that people will find ways to go about things and not mess everything up. At least since now we already have this uniform framework. And I know stablecoins are a very boring topic, but they are, you know, the product with, you know, they have the most PMF basically. And we're seeing a lot of reports, we're seeing a lot of usage of stablecoins, but I can't help but feel that in the West, for example, companies in the West, the main use of stablecoins at this point is to get yield, at least. We're seeing these banks that weren't previously in crypto trying to integrate stablecoins so that they can provide yield, because they're seeing that people are using stablecoins to get yield instead of you know, leaving it on an interest rate that's less than 1%, for example. Yet not a lot of people pay attention on the usage of stablecoins on developing countries, for example. So I just want to hear your take as to where are we going with stablecoins, and what should we feel that could happen in the next 5 years. And I see a lot of reports every day about how the usage of stablecoins has increased, these billions of dollars trading and stuff. But how do we know that that's not attributed to, for example, wash trading or other things? So I know I put a lot of things in this question, but I had to vent.
Yeah. I can try to answer the first and slightly second part, and pass it to Ashna as well. I think on the on the regulator and the compliance side of things, I just want to add just comment on that. That is always been arbitrage, right? So like for innovators should innovate. So that's the path, right? So like the founders, they should have the fastest way to start the company and, you know, establish the business and I don't know, like go live, acquire first customers. So I guess like just to wrap up on this regulation part, I guess that's we would still probably see like those examples in the next like 5 maybe to 10 years even here in Europe locally, but you know, globally it's going to be, I guess, even more saturated and fragmented. So for the second part of the stablecoin usage, I agree with you. There's a lot of narratives around the vaults and around like the yield products for financial institutions, because there's more like, I guess, bigger correlation between like their existing businesses and what, you know, they can potentially inherit if they implement like a stablecoin infrastructure for the yield. But if you look at the nature of the stablecoin yield, it's primarily coming from treasury bills. So it's kind of like more or less the same thing. And if you look at the largest stablecoin issuers like Circle and all the other guys, like they're like overall, I guess, APYs, they're kind of like more and less like correlating with the existing like I guess percentages in the banks. So it's kind of like going lower over the time. So so that was definitely again arbitrage and like a gap between like initial I guess offering from traditional banks, from central banks in different countries, and like a stable coin providers. But there was a lot of risk as well. Like there was like different like DeFi primitives, like looping primitives, where like you can have a larger risk, but also expose yourself. And if you're like a largest financial institution or enterprise, you actually expose not only like your company to the risk like before the regulator of the country you kind of like operating framework with, but also like your customers. So I guess what we see right now more and more is the usage of the stable coins, for example, in settlements. So Mercuryo we do settlements like in stable coins with most of our partners. That's our like day-to-day routine for the last 7 years. And now we see like all of the other financial institutions, even the largest banks that we used to have as strategic partners, as like providers, vendors to facilitate products that we offer to crypto native platforms. So even them between each other, they start to operate like and do settlements and different transactions in stable coins, and especially starting with companies like Mercuryo, because we're kind of more like I would say crypto native for those guys, and our business is basically move money in between banks and stable coins. If you think about this, kind of essentially what we're doing for individuals, and then for institutions, we helping them to move money in between those two worlds. So I guess those are like two different narratives that you will probably hear more and more in terms of the use cases in different countries, especially in developing countries. But I guess the numbers that you mentioned, they're like real. And for example, just today, Ramp announced their launch of the stablecoin platform, where all of the Ramp operations in US, where like people usually have it as a payroll or like different remittances, like a business operations, they will now support the stablecoin, which is kind of like enables cross-border payments, like 24/7 access, and pretty like cheap cost as well. Yeah. So overall, for businesses, it's great use case, and I guess for businesses that operate at scale, B2B or B2C way, that's the moving forward path. But there's always like constraints, I guess, involved in the regulatory frameworks, and I guess like different like fraud operations and preventions of the fraud in different countries. So it's probably is going to be still a while where we're going to see like this examples and use cases developing.
Yeah, I'd like to follow up, and Arthur's correct regarding arbitrage. So we're seeing really high volumes in, say, Africa, Latin America. Stablecoins, I think, is it's the gateway to crypto. There's no volatility. The assumption that so volatile you'll lose money, that doesn't happen in stablecoin. So I think it's within 5 years it could get into a better position with protection of MiCA as well. But I think it's definitely a good subject. Boring, but it's growing, and you see traditional finance trying to take a piece of this pie as well. So it's trying to get to that regulated token for sure.
I mean, it could be boring, but it's actually why crypto is actually like still alive, in my opinion, from 2021.
100%. Yeah.
That's what kept us here. At least me. I know when I heard that I can, like swap my tokens for stable coins, I was like, okay, maybe I can stay and not cash everything out when the bear market hit. Yeah. So I want to talk about Mercuryo, and you guys have a crypto card as well. So why did you decide to do this? Because I mean, it makes sense. It comes naturally, probably. Like you have your own on and off ramping solutions and infrastructure. You guys do. I mean, you have the technology basically. So why not have a crypto card? But why should I use your crypto card now? Because I'm asking the same questions for different products and services that you guys do. But I really want to know because first, I'm a Web3 guy, right? Web3 enthusiast, and then I'm a podcast host. So I want to know, why should I use the crypto card that you guys have?
I can start, and you actually can probably add some bits on the partnership, specifically with our strategic partner Mastercard in the sense. So we were like pretty close, like relationships with Mastercard for the last, like maybe like all 7 years that we started the company, and we had this kind of like different stages where we were, I guess, like using Mastercard like products indirectly through like banks and like different providers that Mercuryo used to have for our flagship product on and off ramp. And I guess at some point, like we realized that we can do like much more things because we got like more closer to the team, and we had like great relationships along the way, and we just decided to launch the product. And well, I guess first like talk to the existing partners and us users, run some like surveys if they would like to have any extension to off ramp. This is how we saw it actually in the first place. Like we had an on ramp, but we also had an off ramp product, and we thought like some of the users, they would prefer, like you said, to keep their stables and just use it because that's easier, probably in terms of transition between like those two worlds. So if you're using like natively stable coins or like any other assets for any like crypto platforms, you would probably like to stay as much as closer to this kind of like transition in the real world as well. So, and I guess in a lot of countries, you can just off-ramp your stablecoin or any other digital assets into your banks. But I guess there's still transition, the wait time, like the limits and all of the other stuff. So we thought that we can kind of like optimize this UX. And that was, I guess, our whole DNA, because we saw like the problem from the product perspective. Like it was really hard to on-ramp capital, on-ramp money into like digital assets back then. And we thought about this the same way about the off-ramp, basically. So we can optimize around that. And we had this great partnership with MasterCard where, they were basically suggesting us to explore this program. So we ran these surveys, and we realized like a lot of partners, they actually would love to have it. And some of them actually had this before with other players. I guess the reason why, well, first, like partners decided to go with us. And then we decided to, and the users might be interested in that, is this kind of like transition. So where you using your like Ledger wallet or any other wallets, and I guess Mercuryo has like products across majority of the self-custodial wallets. We usually have like on and off ramp products there. So the reason why you might need to, you might find this like valuable, more reasonable for you to use Mercuryo card because you're already using Mercuryo for on and off ramps, and you kind of like verified, you have like high limits, you have like customer support, and like very much a client-oriented approach for crypto native products, which usually you don't really have with the banks. And at the same time, we're not operating like in a way that we hold in any user assets. So it's kind of full self-custodial. And you can store value inside the self-custodial wallet, use it for any of, I don't know, use cases and examples like in the crypto native world. But at the same time, you can have the card and like a neobank experience with this self-custodial wallet, where you can probably find it like easier sometimes to spend this stable coin in the real world, like go get groceries or like pay the bill in the restaurant. So that was kind of initial idea, like optimizing around UX, optimizing around the partners and our existing users. And we are like looking into more some, I guess, next stages, just a future outlook where we see the potential for the users and more interest for everyone in this market is build like kind of like a Amex experience where, like a Revolut Ultra per se here in Europe. So like where you have like all of the perks, all of the different lounges, all of the different eSIM cards and stuff like that. So where users might have actually benefits from existing perks that they usually have with their like neobanks or like fintechs or banks, but inside self-custodial wallets. But it's like kind of like moving forward, this is what we're developing right now. And again, running the service and trying to navigate what's the best.
I think from my side, of course, MasterCard is a huge strategic partner, and we were on the same page when we were discussing compliance. Compliance comes first, regulations comes first for them. For us, it did. So it was a very easy conversation. From there, everything was seamless. the actual process of using the Mercuryo card is seamless. It's really easy to use. I'm being biased, but the next reason is that we've got exceptional support team. That we're around 24/7. So any issues that you run into 2 a.m. when you're paying for something on checkout or at a bar or whatever, you have support there if you need it. We also have the success team that can work with partners, strategic partners, to ensure that users are using this. What's conversion rate, helping you get to the next level. So yeah, that's why you should use the Mercuryo spend card.
I might just use the Mercuryo.
You should.
card. Yeah.
We're onboarded now, so.
Oh, good.
Well, speaking on onboarding, I mean, so you guys do B2B and B2C, and so far I had the compliant hat on, and now I want to put the degen hat on a bit. When I joined crypto, the first thing I would look at, for example, even when signing up for an exchange, I would look at whether there's KYC or not. And of course, I would opt to choose the exchanges that did not require mandatory KYC. And I think, like, at least this is my opinion, a lot of people, when signing up, for example, to use a platform or to use different products, that they kind of like leave it halfway through it because they don't want to go the extra mile in terms of, you know, verifying and doing the KYC. And this is like a necessity, of course, but there's also a barrier when it comes to onboarding people. So what do you have to do as Mercuryo to have the users go that extra mile in order to join you guys?
I can
Yeah,
start.
yeah.
I think it's just also going back to the previous question about why you should use over other cards. There is a lot of cards, and I guess for me will be first still the thing that Ashna just said about the client approach, where you might have like companies extremely regulated in the sense of their business, even neobanks that offer crypto native cards right now. Like you might see some of them are launching cards. Their business is like opening bank accounts for users, and they're like operating in like highly regulated environment where, you know, they're probably more tighter like kind of like requirements and like standards for compliance team. So what it means for you as a user, it means like they will always prioritize their main business as usual, which is probably banking, and they have a banking license or like a small banking license, and it's kind of like extremely regulated space. So they will probably use this as an excuse to sometimes like put some limitations on the usage of their products that are less priority as a main business. So the same way with the crypto exchanges, right? So centralized exchanges that offer cards right now, so many of them, I guess most of them offer crypto cards at the moment. Like their main business is like trading, I don't know, spot futures, like some other products. So some of them are actually our very close partners, and we helping them to, I guess, right now there is a narrative. Some of them, they want to be like more like as a fintech and a neobank, and we came a long way from like finessing the products and the vision for kind of like crypto native platforms that should be like look-alike for in terms of like the usage and products. So I guess we're happy to support like all of those use cases right now, but like still like their regulation team and the compliant team like is a little bit like different, and overall support team, I guess like the client service is primarily around the business as usual, and they have like dozen like 100 millions of users. So it's kind of, I guess sometimes it's get tricky when you want to get your food like paid like at 2 a.m. So I guess I think for us it's very important to have like those two in place, like really fast response and the use cases with self-custodial wallets, but at the same time we do understand that there's a broader view on the ecosystem, and there will be players that's offering the similar products too.
You mentioned trading, exchanges, and the stable coins, and the card as well, all during this answer. So I want to like combine them and ask another question. Now we know that stable coins are like the usage of stable coins is increasing every single day, but I think there's a report. I'm not sure. Like I can't really cite the source right now. There's like 80% of stablecoin usage is still tied to trading, and that trading, most of that trading happens on centralized exchanges, which will probably they should use your on and off ramping solutions, by the way. So do you think, like in the next, let's say, 5 to 10 years, do you think that people will actually be using crypto, okay, let's say stable coins, to buy things and actually spend it somewhere other than just trading? Will this, discrepancy between, like you actual usages and trading be, smaller maybe, like in your eyes?
Yeah, I think absolutely there will be even more use cases this year with real world assets and companies that, for example, doing, I don't know, real estate, like or like different type of real world like use cases. So like I believe they will be working very closely because it gives them like actually more freedom and more like flexibility in offering their main business products to like the customers. So the stable coins and like I guess cards and everything that helps to bridge this gap between them and the end customer will definitely help them to, I guess, speed up this kind of transition and offer better services.
Yeah, I agree. I think the education piece that I touched on, I think once we start educating, seeing more of a transparent flow, I would say between 1 to 3 years, we'll see it as normal, everyday purchase. For sure, I think so.
You guys have also had partnerships with the likes of Ledger as well, and I did stumble upon something, but I could not find a lot of information on Mercuryo Pro. What's that? Could you like walk me through that?
Mercuryo Pro, so yeah, it's a product of ours, quite successful as well. So basically, it's essentially an OTC deal,
Okay.
over the counter deal. So if you want to purchase over 50K, we walk you through the flow of the Mercuryo Pro process. So we've integrated this with Ledger, and we have one on our own site as well.
Yeah, I just add the few bits on this because I like this product actually.
That's why I was
So
bringing it to you.
no. I wanted to explain the from the technical.
I made the
perspective.
right question then.
Yeah. No, like I think the best example. Well, first, I think the way we stop some of the products besides like on and off ramps is very interesting. It's more like experimental. So like we were thinking about something that might help users to, for example, Ledger. Think about is like there's like a private banking experience. So they have like a high net worth individuals and ultra high net worth individuals that using Ledger, and security is the largest, I guess, narrative there. And so like for those individuals, you might want to have like a special extra care and service, and the product essentially that allows you to, I guess, simplify their like daily operations and movements of the flow funds. So I think we were very passionate about both, like the I guess serving different types of users and actually identifying like what of these users might potentially use in the future, what are the products we can offer them, different groups of users, so like DJN, like traders, or like I don't know, family office managers. So I guess this is how we started with the experiment, and yeah, we just saw it's growing, and we just saw there is demand in some specific platforms, not all of them, but like specific platforms they might prefer this product, and Ledger was one of the first like pilot partners in this case, and I guess with Ledger we had like the largest number of launched products by far. Ashna, correct me if I'm wrong. And we keep experimenting. I guess we're gonna have something interesting this week as well.
Yeah, I think being like, close to Ledger is a good thing, because if you both would be like the leaders in this space. What, like in your eyes, both, this is a question directed to both of you guys. In your eyes, what is the biggest challenge that Mercuryo has right now? Let's say, and how do you like plan to solve it in the near future?
It's a very good question.
Thank you.
I think it is, from my side, it's more regulation side of it. It's more staying ahead of the curve, making sure that, we're acquiring these valuable licenses and we are, always thinking about the end user. I wouldn't say there is anything that is a huge challenge that I can think that's pointing out to me now. I would just say it's the rapid change of the way regulation is going, and it's just staying ahead of the curve for all of the changes that's happening. Um, that's what I can think of. What do you think?
Yeah, I think you're a little bit underplaying the biggest challenge that we had. We actually have lots of customers and business processes right now, and Ashna is like dealing with all of them. And I guess the biggest challenge is just to navigate between those customers at the moment, because like over the time you have like a you have very sustainable user base that like the product, and both like from partners perspective, like some enterprises and crypto platforms and users. But like moving forward, it's just always the question, like how would you like to shape it? And I guess the biggest challenge there always was like communication with some of the teams. But thankfully right now, I guess like most of the crypto native teams we're dealing with, they have like people that well educated enough like during our partnership, right? So they also partner with some of the other payment companies along the way. And some of the teams we work with like for the 6 years, different like self-custodial wallets and platforms. And some of them, for example, the prizes, they're coming with already existing knowledge, right? So like larger financial institutions in the world, we're like in the process of like experimenting, like doing new products, and they're also like trying to, I guess, step in this crypto native world and not replace everything that they had before as a legacy business, but kind of like start more subsidiary, like a small startups, but with a huge upside and potential. So the challenge from business, like existing business perspective and like the new business perspective, we're looking at, both me and Ashna, I think, is to kind of like navigate between those priorities. And yeah, I guess like when you have like so much opportunities and upside, like in the new business world, like in the new space, and the regulational framework allows you to experiment and allows you to move faster than before. And you also have existing business and like clients that's using your everyday, and I guess there's thousands of chats like in Slack or Telegram. So like they all want to collaborate and do some things together. For us, it's never been the best timing, to be honest, to be in the space. Like we're super excited to overcome these challenges right now, and looking forward like to see how it will evolve this year.
I think echoing that, it's if I look at operational side, the volume is insane. The support teams, success teams, it's overwhelming. But of course, resource is always going to be a concern at any company. Volumes are crazy. It really is. So I think the operational pressure is there. But when you have the right people in the team that work together, that's what's really counts. And it's not so much a challenge, but it's more of an opportunity that we see it.
To having the right team, to staying educated, and to staying ahead of the curve. Well, thank you so much, guys, for joining us today. It was a real pleasure and privilege to have you both of you here today with us. And please excuse the DIY setup, but this is also us being innovative when we are facing challenges. So
very Mercuryo, I love it.
yeah, exactly.
Thank you, guys.
Thank you very much for having us, guys.
It was a pleasure.
Amazing.